how the future digital bank is going to look like and what is the role that it is going to play, especially pertaining to the present generation of people that we have. So my name is Shantanu, and I work as an innovation manager in one of the leading IT companies. And myself and my colleagues are, are into a venture of finding out that how innovative banking can happen and how the future of banking industry can be. So in next half an hour to 45 minutes, we are going to spend some time about this thought process, and would like to hear from you that what you think about it. And then towards the end, we have a question answer session in which I would like to take your questions, and if I can answer them in this call, it's fine. Otherwise, please leave your thought. I will get back to you. So without any further things, I would just like you to see the background of this particular slide. If you see the slide, the background of the slide, it is divided into two parts. The top part of the slide gives you a conventional flight deck. So if you have to kind of fly an aircraft, you need the knowledge of a pilot, so who deals with so many parameters at one point of time and run the airplane. But possibly in future, it's going to be more simplistic, so that he can fly the same aircraft, but the controls are going to be contextualized for him. So there is a simile of this particular scenario to our banking customers, and we are going to discover that and in due course of our presentation. And possibly towards the end of my presentation, I'm going to take you back to this two graphics again, or the pictures again, to interpret that, can we make the things more simplistic for the customer, and is it the direction in which the future digital banks are going to go. So this is going to be pretty much, the agenda that I thought that I will speak about. One is the first, we will start with the searching of a unified view. And so with plethora of financial relationships that each one of us maintain, do we really understand that where we are in terms of a 360-degree view of my financial position? And then we will get into the expectation of the millennial from their banks. So what they expect. Are they averse to the banking? Possibly not. So we are going to look at a couple of survey to understand that what is the expectation of a customer from the bank, especially the newer generation, the millennials, and what is their ask from the banking industry. Then we are going to look at an interesting study by one of the leading universities to see that across industry how the digital transformation is going to be important in today as well as in next possibly in a 5-year time span. And then we are going to look at the technology stack that you possibly need to have in order to meet those kind of expectations from your customer. Then we will look at a couple of use cases. The first one is actually a small experiment that I have done. I'm going to present that to you to show that similar 360-degree view. And then we are going to also look at a couple of use cases, and we'll discuss about the fact that how these use cases are going to be relevant for the future banks, and how it can add value to their customer. And towards the end we will do that why I need to do all this, and is it by choice, or I still has an option of opting out as a bank from this kind of a digital transformation, or is it going to be the rule of the game and unless I do it, I am going to be left out. And then we will have our question answer session. So if this is fine, then I would like to start with the first point in the agenda, which is in search of a unified view. So the first here, what we are going to, what we are seeing here is that on the left side, if you look at towards in the screen, that we have got many financial relationships that we all as individual maintain now. So I have got my bank account, I have got my credit cards, I have got my loan accounts, and this loan can be again my mortgage, my car loan, personal loan, any office loans that I have taken. I do an investment in terms of stock, mutual funds, bonds, golds, and any other financial vehicle that I can choose for doing my investments. I can have my protection in terms of the insurances that I take. So it can be again can have a variance there in terms of the life insurance, the health, the insurance for your home, car, and then you have your retirement savings. So if you look at this entire financial bouquet, you will have not less than 40-45 relationships that every individual now maintains, and each of this relationship has got to do with your financial health, your financial goal, and where there is an unified view here. I don't find for myself, I don't know, possibly a very informed user in my audience today might be, taking all this data into a spreadsheet or their own database and doing the analysis. But getting such an unified view, and which will be contextual, personalized for you, and which will make sense for you, might be very difficult to get for anyone. So if that is the kind of context that we have, so the first person is asking that same question, that do I have a unified view of all my financial relationship? The next thing is possibly which makes me curious is, what are my peers doing? So I belong to a particular demographic profile. I have a certain amount of income. I live in a particular city. I work for a particular industry, belong to a age group. So my financial goals, does it match with my peers? Am I doing good in terms of my comparison with others? Am I setting the right kind of targets and goals for me? So there is a curiosity that is there. But if the first question is not answered, that means if your bank or the financial institution or your financial advisor does not know a 360-degree of finance view of yours, obviously the second question does not arise, because whatever view that he or she will suggest to you is only going to be something which is partial and not full. The third thing is, in these complex relationships that I am maintaining across some 40-45 different type of relationships that I am maintaining, my financial KPIs are getting distributed across my relationship. So if I give an example that how much liability that I can own, that liability is spread across all my lending relationships that I have. Now at any and this things are changing over time, right? I am taking a short-term in some places I am taking a short-term credit. In some places there are long-term loans that I have taken. Now in order to comprehend that, in terms of lending and to my income, I really do not have a view unless all this data comes in one place and someone crunches this data to give me a meaningful insight into my financial KPI. Otherwise, the only other option for a very informed user is possibly, get all his own data into a spreadsheet and then do his own computation. Now here, the expectation starts in. Here the digital customer experience that comes in. With the advancement of technology, can you give me a view which is unified, personalized, contextual for me? And can I make sense out of these across all my relationship? And yeah, there are some companies which are offering those services, but possibly it's quite handful, and those are also not 360 degree. So my financial advisor definitely they are doing a wonderful job in this area, but that is where my dissonance comes in. I possibly, yeah, do rely on the fintechs and do business because they are nimble, they cater to my need, they are personalized, contextual. But my old partner with whom I do all my financial transaction or would like to maintain all my financial transactions, those banks are possibly lagging behind, barring few banks which are really advancing in this field in order to give the next generation customer experience. So if we move on and see that what these millennials are thinking in terms of in some of the current surveys that we have a Cassandra report, and the report starts off by saying that why the millennial are losing interest in their bank. Now, I have divided this particular report, or taken out the three important things from this report. Is if you look at the first one, the number one here, they say that the um, big banks are not designed to serve this generation. So the generation of instant gratification, the generation who is always online, the generation who does not fear to publish a lot of information, um, the banks are not geared up for this. So this came as one of the main observation. And if you look at the number, it is very high, that 6 out of 10 think that banks are not geared up. Now let us look at point number 2 here, which is towards the left side of the slide, right side of the slide. It says that, going to a bank feels like going to an office of a DMV. Now this is a very serious concern for the bank, because it still looks like that old organization where it will ask you to fill up a lot of forms and very procedural, and offers generic product not specific to your need. And if you look at the third thing, it talks about the same thing in a different packet. It is saying that the three generation traits, which is instant gratification, thoughtful personalization, and the digital education. This is where there is a lack between the current providers and the expectation of the banking customers. With this, let us look at another report in the same area. This report is the Millennial Disruption Index. So they have done a study, and it is quite an elaborate study that they have conducted, and they have presented their findings. And if you look at their findings, they have spent about 3 years, 15 categories, and 10,000 plus respondents. They have done this study, and then they have come up with their observations or results. So if you look at point number 1 on the towards the left side, you will see that the banking industry is the one which is going to get disrupted most because of the digitization. And the other industries like the household good, the retail, the mobile industry, the personal computing and online, they are going to get disrupted, but not to the extent of the banking industry. If you look at, the point number 2 that they are saying as a result of their survey is 53% people think that their bank are no different from other bank. So, if I have a relationship with X and a relationship with Y, it's all the same. There is no differentiation. 1/3 of them says that, they are possibly going to change their banking relationship in next 90 days time. Okay. Is it better now?
Yes.
Okay. Thank you. So I was here at their survey result number 4, and what it says is 1 out of 3 says that I can switch my bank in next 90 days. So I do not have any kind of any kind of impetus to bank with my current banker. And the third one is a little funny one, but this is also very significant. I would rather go to a dentist than to listen to the bank. So the phone calls that they make, the brochures that they send, they are not contextual to me. This is some generic brochure and does not make sense to me. The phone calls come at an inopportune time when I don't have time. The bank people, keep calling me for something and does not understand me as a customer. So it is rather better to go to the dentist than to the bank. And if you look at the fifth one is uh, one of the least loved brands of the millennials are the banks, right? And 6 and 7 are similar, which are very, very depressing for the banking industry. And the last one, if you look at, which is very surprising, that 33% believes that we don't need bank at all. So if that is the kind of scenario that are coming in, if we see that in the payment industry right now, there are a lot of new entrants who have come in and try to grab the share of the banks. So what does the bank need to do in order to reinvent themselves and really come to the forefront in order to lead the industry or the financial positions? But by saying all this, is there apathy towards the bank? It is actually not. The millennials still thinks that the banks are important, banks are required, and banks are the people to whom they would like to trust. But at the same point of time, there is a gap which got created, and that is the gap which through the next generation digitization the banks have to bridge up in order to come to the forefront. So with this, if I try to conclude from what we learned from this two particular survey, is the writing is very clear on the wall that there is a need for a digital transformation for the bank, and it is not only going to be a technology innovation, the mindset also needs to undergo a lot of change, because you need to put yourself in the shoes of your customer to understand their pain point or expectation, and then digitization is just going to be an enabler, and you have to design your product in such a way that they feel, excited about the relationship that you have. So if you look at a lot of technologies which are present, but a technology solution has obviously the things to do with the technology, but how you are placing your technology to address a particular problem is what is the essence, or what is the need of an hour. So if you look here, the first point that we have here is breaking away from a product paradigm to offer services. When I say this, is like, the products are going to be generic. So today you have a efficiency advantage. Tomorrow that competitive advantage is not going to be there, because all of the banks will be having the same set of technology from the same set of service provider. So it is not going to be a differentiator anymore. But if you can actually put those things around your product and can offer a service, then only you are going to get that going to retain that competitive advantage and can attract your customers. And one of the main ways that has come up from all these surveys, how do I make an offer to my customers which is contextual and personalized for me? So if I give a a small example, it is something like, can you find out that when I am free to talk to you? So in the if you look at present generation, we interact so much in the social media, right? So it is not difficult to find out that the time possibly I am spending and in the social media, possibly that is a time where you can approach me. I understand that there can be intervention into my personal space, but if you can find out by some means that this is the best possible time to interact with me, more often than not, some of your propositions I may hear and is interested in getting into a conversation with you. If I am there on a mobile device, and if I am there and very comfortable in doing a chat, then chat possibly is a platform where the bank needs to come and speak to its customer. So that contextualization and personalization is going to be to that extent, but its design and the way we have to use is what you need to think. So here the technology is only going to be an enabler, but that thinking, that design is going to be the key essence of success here. So if we move on to the green box, this is just an extension of the same thought, that just offering a mortgage is not going to be enough. So be a partner in making or building my home. So understand that what is the kind of home that I need, in which part of the country I am looking for a home, what is the kind of a home that I am looking for. Then even if you trace me back to in a locality and where I am through my GPS and tell me, hey Shantanu, here there are some similar kind of homes are available there, and through my social media network, if you get to know that some of my friends are staying there, and also give me this information. Yeah, if I have given you those rights of giving me those informations, which the millennials are not very averse to, then that is the kind of personalization, that is the kind of contextualization that we are looking at. So possibly mortgage as a product is going to be generic, but if you can excite me, if you can give me such a personalized offer, then obviously there are going to be the differentiation, and leveraging those differentiation, you can further your relationships, and the actual true sense of digitization and its benefits are going to accrue to the bank as well as to the customers, because the customers are going to get improved service, the banks are going to get or retain, or will be able to retain their customers, and can further their business with the customer, and that's how the next generation banking is going to be. Then are we talking about a paradigm? Let's come to this, this cyan color here or blue color here. That are we talking about a paradigm in which the branches are not required? No, the personalized touch is required. So the millennials also, in certain survey results, they also say that yeah, that is required, but your branch can then serve a different purpose. So any kind of a transactional need that I have, I should be able to do on the online device that I have, and for that I do not need to go to the branch. But when I visit the branch, I should be able to do a lot more things. I might go to the branch to buy a card, to experience, virtual, in a virtual reality field. I should be able to experience a different variety of card that I wish to acquire. And then as a bank, if you have got a relationship with multiple automobile manufacturers, then can you give me an offer then and there? And through that virtualized journey, I might choose one of the cars which I book for a test drive, and you as a bank offer me a loan and be part of this journey. So that is the kind of facilities for which the branch can be used, and a branch can have agents who can be again a virtual or a physical agent, but their job is going to serve a purpose and not going to sell a particular product. So that is the kind of experience that is going to be relevant for the banking industry in possibly next few years itself. So we talked about the digitization and the human connect there, and all along, if you look at, possibly the technologies are present, or some or better technology enablers are going to be there. But this entire thing, when you design, there is a lot of mindset change that needs to be there with the bankers in order to not only adapt these technologies, but also to take these technologies to that next paradigm of services offering, wherein they can unite with their customer. Now, if you have to do, okay, let's look at this survey. There is another study which is being done by MIT and Sloan, and this is what their study is depicting. They are saying that the digital capability and the leadership capability, if they plot, then if you are a beginner, you are going to lose your revenue, profitability, as well as the market value. And this is not only for today. This is going to be for next 3 to 4 years. And if you look at, the value difference between a digital master and a beginner, it's a no-brainer to tell you that, it might be so strong that you may not be there in the market at all. And look at the person who is conservative. Although he is being able to retain some amount of profitability, but he is losing revenue. So he is on the death path. So it's today or tomorrow, he is actually going to get shifted from this quadrant to this quadrant, or going back, and slowly moving onto this first quadrant. So being a digital master is possibly not a choice, but it is something of a compulsive need that is there for the banking industry, which is going to get disrupted the most in order to take that forward. So now, if this is the industry scenario that we have, then we started off a couple of slides back. We started off with the expectation from the millennials, right? that I have so many relationship and these are the questions that I have. This is the kind of digital customer experience that I have. So we actually had this left side, which is, my main problem statement, that do I have a 360-degree view of all my relationship? And this is what is the expectation from the customer. So they wanted to have this digital customer experience, so which was the top part of the slide. Now what I have added is what you need to have under the bonnet in terms of the tech stack in order to enable you to meet this kind of a customer demand or the customer expectation. So three of the things I have mentioned here, and I have added a lot of dots here. So let us deal with these three, and there are other things which we will discuss during the course of our discussion. So first of all, this open banking API connect platform, which is coming, and possibly the final draft is there in place right now, and is going to come in next year in Europe. Now, what is the thing that we are talking about here is just to give a very brief introduction of this is. Banks typically have got, are the custodians of the financial asset, but they also have got a lot of data. Now, this data is also a valuable asset. And if we look at the open banking norms, then possibly there is going to be a regulation to publish this information in a secure channel, but that is just a regulatory requirement. But what is going to be the leaders in banking would be doing? They would possibly go one step down and possibly make their entire data set available over different APIs. So whatever, the layer of technology that you have, even if it is, a older technology set, you are going to build a layer of technology on top of it, which will interact with your own digital systems, which will connect to your customer as well as outside to different APIs. And these APIs are going to get standardized by the regulation, and the advantage that you are going to get out of this is in terms of personalized contextual offering. This is one of the key things to have. Without having this, it is not possible at all to give that 360-degree view. And whether you like it or not, whether you want to keep the information to you or not, the regulation is going to liberate the information. So if a customer is getting a loan from a bank at a higher rate, tomorrow I as a competitor bank will have a view of it. And obviously the next thing that can happen is there will be a lead generation that I will do in order to acquire that loan. So the data silos are not going to remain with the banks. They have to open up, and it is better that they embrace it as instead of a regulation, but as an opportunity to getting more involved with their customer. And once they get all the information into an API layer, what is going to happen is they are only going to discover a lot of opportunities. Like from a bank itself, there are different siloed informations which are there, and possibly one product manager does not have any idea that that there is a different product where the same customer is looking for, because there is no unified view for the bank's internal employees as well. So this API or liberation of the data in the form of an API is going to make a lot of innovative product design because of the view which is right now restricted or partially liberated. Next is, that demographic data. Possibly the bank has got it, but it is not using it to the full. So it is not being able to tell me that I, as a customer, how am I doing in terms of with respect to my peers. And it is not also educating me that, in terms of the fact that what is the different kind of financial goals that I should keep for myself, and I should how am I going to achieve those goals. And third is, obviously, analytics is going to play a lot more prominent role in this, because all along we are talking about data unification, data interpretation, and offering of the product. So the next best action that a customer can take is going to be governed by the analytics platform. And it is not about technology, it is about using analytics to actually solve a particular problem is going to be important. So with this, I kind of covered the area that I wanted to cover. Now I have a couple of use cases. How much time do I have? Is it next 9 minutes or so?
Yes, we have about 9 minutes remaining.
Okay. So what I will do is, this is a small experiment that I have done. I will quickly, take you through so that we can have at least a 5-minute session in terms of our question answers. So what I have done here is, that how the 360-degree view in a very simplistic way it is going to look at. And so, it's about giving this net worth of an individual with the peer comparison. So if you look at this particular graph that we have, it is talking about the fact that your total assets and your total liabilities, and if I deduct them, then I get your net worth. And then I have your liquidity position, that is the amount of cash balance that you maintain and the amount of upcoming payments that you have. And here are the details of them. And then your contextualized budget for you. So what is the kind of budget that you have set for yourself under different categories, and how those budgets you are using. So that what the main point behind this is that if I get a full view of all my relationships into one, then only I am going to comprehend my financial position, and then only I'll be able to interpret and my exact status, and based on that I can take a decision on that. And if you let me take you a little forward here. So here, here what I have here is, like, this person is maintaining a net worth which is very close to the target he has set. He is tilted towards the best in his class. So demographic information based on which the best in his class is this, and this is what we are getting here, and the worst in his class is this. So that is the peer comparison with the net worth across all your relationship is what I was talking about. Now, if you come here, what it tells you that different kind of relationships you can have, and can I get a unified view of your relationship? Different, your upcoming payments can be there with various service providers. Can I get a total view of this? And what we see here is that the guy has set a target of 2, but he is maintaining too much of cash in his bank. So the bank can come back and say that it is the time that you may better utilize your money. Similarly, for budgeting, this can be a PFM view which bank does not give you, or rather a fintech gives you. But banks can give you this kind of thing and can have relationships with other companies in the entertainment, medical, and all other spaces. so that they can offer products from them. Now let us look at these two cases shortly. One is the utility bill payment. So if I put a analytics engine, say if some of the utility companies, the banks, the utility bill comes through the bank to you, and you make the payment, right? So yeah, if I put a analytics engine to understand that whether there is a bill shock for you that has happened, there is an abnormality in bill that you have received, and then I can give you lead for energy saving products. So that is the kind of personalization and depth that the bank can get into. The bank gets your whenever you are going to a gas station and for fueling, it knows the amount of fuel that you are burning. Now with your kind of journey pattern, it can get that if what is the amount of travel that you are doing. So getting all this information in one place, bank can actually come back with the thing that if your car has become a guzzler, and do you have a need for a new car. So these are the simple analytics can get into those kind of spaces, what the bank can get into. If you look at this particular slide, the background of it's simplistic, and that is the kind of use cases that the bank has to get into and make the life simple for the millennial in order to attract them with the bank. And this is the last bit. So if the millennials are there in the mobile device, you have to take your banking to that device. If they are asking for a personalized contextual view, then from the electricity bill to the the car fuel spend, to the personalized budgeting, every place you need to approach them. If you do that, yes, that you are going to live up to the expectation of the your customer. And for the bank, the benefit is the attrition, which is the highest among the millennial, is going to get addressed. New journey will begin with your customer. You will have a lot of cross-selling open up among your own employees, because they will get that unified view, and that will make the bank happy. And for a person like us who serves the bank from the IT perspective, then obviously we are also going to get benefited by the investment.